You sit there staring at the screen. The last trade was a loss. But instead of stopping, your hand twitches. Maybe one more will fix it. That's how it begins, the endless cycle of chasing, clicking, hoping. Every trader has been here, drowning in regret. You feel the guilt before the candle even closes. Your heart sinks. Another red bar crashes down, taking your money with it. You whisper, "Why did I do that?" The market doesn't answer. Silence. Just the heavy weight of regret pressing harder on your chest. How many times have you done this? One trade too many. One click that wiped away hours of profit. You promised yourself you'd stop. But in the heat of the moment, discipline disappears. And you realize, the market isn't your enemy. Your mind is. Overtrading feels like quicksand. The more you fight, the deeper you sink. The charts blur. Your balance bleeds. But here's the secret. Every great trader you admire once stood in this same place. The only difference? They built a system to stop it forever. By the end of this video, you'll have that system. A simple, powerful framework that saves you from the endless trap of overtrading. No more guilt. No more panic. Just clarity. And discipline that holds strong even when the market tries to break you. By the end of this video, you'll have that system. A simple, powerful framework that saves you from the endless trap of overtrading. No more guilt. No more panic. Just clarity. And discipline that holds strong even when the market tries to break you. Why do most traders fall into this trap? Because the market is always open, always calling. The flashing green and red candles whisper, "One more trade. Just one more." And like moths to flame, traders burn themselves chasing the next setup that doesn't exist. The first psychological trigger, FOMO. Fear of missing out. You see a big candle shoot up and suddenly you feel left behind. Your mind screams, "If I don't enter now, I'll lose my chance." That urgency hijacks discipline and forces your finger to click. Second trigger, revenge trading. You take a loss and instead of pausing, you fight back. You tell yourself, "I'll win it back on the next one." But revenge never ends well. Loss plus loss equals disaster. And soon your balance looks like a battlefield. Third trigger, boredom. Sitting at the screen waiting for the perfect setup feels slow and painful. So you force a trade just to feel alive. It's not strategy, it's gambling. And boredom turns patience into poison for anyone who doesn't control it. Fourth trigger, greed. You had a green day, but instead of stopping, you want more. Why quit now when I'm winning? Greed blinds you. It whispers that the next trade is guaranteed. Until it wipes away all your gains in one brutal red candle. Real-life example, a trader starts with $5,000. In 1 week, he grows it to $7,500. He feels invincible. Then comes one loss. He fights back. Overtrades all night. By morning, the account is gone. Not the market's fault, his lack of discipline destroyed him. Think of overtrading like overtraining in the gym. One workout builds strength. But 10 workouts in a row? You break your body. Muscles tear, injuries happen. Trading is the same. Too much activity doesn't build progress. It destroys the very foundation you're trying to grow. Or picture overeating junk food. One burger won't kill you. But daily binges? Your body collapses under the weight. Overtrading works the same way. Each unnecessary trade is financial junk food. Small bites at first. Then overload. Then destruction of the system you worked so hard to build. So here's the truth. Overtrading isn't just a technical mistake. It's a psychological prison. The cage is invisible, built from fear, greed, boredom, and revenge. And most traders live their whole careers locked inside, never realizing the door has been open the whole time. FOMO is the silent killer. You see a candle shoot up and your brain screams, "If I don't enter now, I'll miss it." But most times you're late. You buy at the top. The excitement turns to shock as the market punishes your impatience. Revenge trading is worse. You take a loss and instead of stepping back, you double your size. You want the market to pay you back. But the market doesn't care. One angry click leads to another and soon your account bleeds out. Then comes boredom trading. Hours pass. No clear setup. But your fingers itch. You tell yourself, "Let me just take one trade." That one trade becomes 3, then 5. And every random entry erases the discipline you promised yourself to follow. Greed whispers like a devil on your shoulder. You had a profit. You should have stopped. But no, you wanted more. One more trade, one more win. That hunger grows until your profit turns into a loss, and you're left staring at zero. Imagine a trader named Daniel. He started small, $1,000 account. First week, he doubled it. He felt unstoppable. But instead of pausing, he pushed harder, bigger sizes, more trades. By week 3, the account was gone. His crime wasn't lack of strategy. It was overtrading. Daniel's story isn't rare. Most traders don't lose because of bad analysis. They lose because they can't stop. One more click, one more chart, one more bet. Overtrading isn't a strategy problem. It's a self-control problem disguised as ambition. Think of overtrading like overtraining in the gym. You push too many sets, too many reps, too often. Instead of growing stronger, you break down, you injure yourself. Trading is no different. The mind fatigues, the discipline collapses, and mistakes multiply. Or imagine overeating junk food. Feels good for a moment, that rush of flavor. But later, the crash, the regret, the weight gain. Overtrading is the junk food of the markets. It gives temporary highs but long-term damage. Overtrading isn't just losing money. It's emotional damage. Guilt eats you alive. Confidence crumbles. You start questioning your ability, your future, even your worth. And the worst part? That shame pushes you to trade again. The trap resets itself. Every trader thinks they're immune. I'm disciplined. I won't overtrade. But under stress, under boredom, under greed, the brain betrays you. And before you realize it, you've repeated the same mistake you swore never to make again. This is why 90% of traders lose. Not because they don't know charts, but because they don't know themselves. Knowledge is useless without control. The market doesn't punish ignorance, it punishes lack of discipline. And overtrading spreads. One bad session ruins the next. You carry yesterday's mistakes into today. Your brain says, recover. But recovery without rest becomes disaster. Just like an athlete who trains injured, you break beyond repair. The truth? Overtrading is an addiction. The charts, the clicks, the adrenaline. It rewires your brain like a slot machine. Each candle feels like a spin. And the house, the market, always wins against gamblers. Until you name it, you can't fight it. Overtrading must be seen for what it is. A disease of discipline. And like any disease, it can be cured, but only with the right system. That's what we'll build next. It starts small. A $10 loss here, a $20 slip there. You shrug it off. No big deal, you whisper. But small losses pile up like termites in wood, silent, invisible, until one day the entire account collapses without warning. Every trader underestimates compounding losses. They think one mistake is harmless. But mistakes multiply like cancer cells. What began as a drip turns into a flood, sweeping away months of progress in a single reckless session. Soon the account balance looks like a heart monitor flatlining. One reckless overtrade erases a week of good trades. Another wipes out the month. Before long, the account isn't just bleeding, it's clinically dead. But the damage isn't only financial. Overtrading drains the soul. You leave your desk exhausted, heart pounding, mind racing. You promise to sleep, but your brain replays every candle like a nightmare loop. Burnout creeps in. Trading, once exciting, becomes torture. You dread the screen but can't look away. Like an addict staring at a poison he can't stop drinking, you keep returning, knowing it's killing you slowly. Overtrading is emotional self-sabotage. Every unnecessary trade is a dagger into your confidence. Each failure whispers, "You're not good enough." And soon the trader doesn't just lose money, they lose faith in themselves. Confidence erodes one crack at a time. Yesterday you believed in your plan. Today you second-guess every setup. Tomorrow you stop pulling the trigger altogether. Overtrading doesn't just destroy accounts, it destroys belief. Without confidence, discipline collapses. You chase shadows, doubt signals, ignore rules. Soon trading feels like guessing. And when trading feels like guessing, the outcome is always the same: financial ruin. The compounding effect is merciless. One bad habit births another. Overtrading leads to revenge trading. Revenge leads to bigger losses. Bigger losses lead to desperation. And desperation births recklessness. The spiral is endless. Think of it like dominoes. One tilt, one bad decision, and suddenly every piece falls. By the end, nothing stands. Overtrading is the first domino that topples your entire trading career. The hidden cost is time. Each month wasted in overtrading is a month not spent mastering real skills. Years pass. You call yourself a trader, but you've been practicing failure, not trading. And time doesn't forgive. Every day lost to reckless trades is a day you could have built consistency. Instead, you built scars. Your future self looks back, whispering, "Why didn't I stop sooner?" The tragedy of overtrading isn't only financial. It's wasted potential. Brilliant minds that could have built freedom instead burned years chasing noise. The market doesn't just take money, it steals dreams. Some traders never recover. They blow multiple accounts, each time swearing, "This is the last." But they never address the root problem. And without change, the cycle repeats forever. Overtrading destroys your identity. At first you say, "I am a trader." But after repeated failures, the voice changes, "Maybe I'm a loser." That shift is the most dangerous cost of all. Financial loss can be recovered. Emotional scars last longer. A trader with a broken account can rebuild. But a trader with broken confidence may never return. That is why overtrading is lethal. Burnout makes you careless. Carelessness creates bigger losses. Bigger losses create sleepless nights. Sleepless nights create weaker decisions. The cycle feeds itself, destroying you from inside out. Confidence once broken spreads into life. You doubt yourself at work, at home, in relationships. Because when you can't trust your own decisions, every area of life feels uncertain. The financial wound heals slower than you think. You save, rebuild, but deep down, fear lingers. One red candle feels like a knife, reopening the old scar of overtrading. Overtrading doesn't destroy in one strike. It's death by 1,000 cuts, each unnecessary trade carving deeper into your future until nothing remains but regret. The scariest part? Most traders don't realize they're overtrading until it's too late. Only after the account is gone do they see the truth. They weren't fighting the market, they were fighting themselves. Overtrading doesn't just end accounts. It ends careers. It silences traders who might have succeeded if they'd only learned discipline sooner. The graveyard of trading is filled not with losers, but with overtraders. But here's the truth, the destruction isn't final. Every overtrader has a choice, continue down the spiral or break free. Most don't make it, but a few do. And those few rise stronger. If you're watching this, you're not finished. You can stop the bleeding. You can rebuild confidence. You can break the chains of overtrading. The destruction doesn't have to be your ending, it can be your turning point. Many traders think their biggest enemy is the market. But in truth, it's inside their own head. Overtrading doesn't start with charts, it starts with urges, impulses, and cravings for action. That hidden battle within is what destroys more traders than price ever will. The first root cause is discipline. Or rather, the lack of it. Without discipline, every trade feels justified. Every small setup becomes good enough. And soon, rules written carefully in notebooks are ignored when emotions scream louder than logic. This is the birthplace of overtrading. Discipline breaks because dopamine calls louder. That chemical hit after pressing buy or sell feels addictive. Traders chase the rush like gamblers pulling slot machine levers. They aren't trading charts, they're trading feelings. The market becomes their casino, and each click deepens the addiction cycle. Imagine winning a trade. Your heart races, adrenaline spikes, dopamine floods your brain. You feel unstoppable. Now, instead of stopping, you take another trade. And another. Victory blinds you to risk. That need for just one more makes you a victim of your own biology. The opposite is equally dangerous. Losing. After a painful red candlestick wipes your trade, emotions scream for revenge. I'll get it back. That single thought drags you into impulsive decisions, doubling risk, ignoring setups. Revenge trading is the wildfire of overtrading, burning accounts until nothing remains. Another root cause: boredom. Sitting at screens all day waiting for the perfect setup feels unbearable. Impatience takes over. Traders click just to feel alive, as if activity equals progress. But meaningless trades pile up losses faster than good trades can ever recover. Greed fuels the cycle. Instead of being content with one solid trade, traders crave more. The thought whispers, "What if I could double this?" That whisper grows into a roar, and greed hijacks reason. A small win turns into reckless hunting for impossible gains. The market doesn't make this easier. Constant signals flash everywhere. Indicators, alerts, social media gurus, news headlines. Each one screams, opportunity. The more noise you consume, the more your brain believes there's always a trade to grab. Temptation is everywhere, and resisting feels nearly impossible. News-driven volatility adds another layer. Suddenly, charts explode with motion. Fear of missing out takes control. What if this is the move of the year? Instead of sticking to strategy, traders chase chaos. They forget, the market will move again tomorrow. But greed blinds today. Social media is gasoline on the fire. Traders scroll and see others posting profits, bragging about huge wins. Envy grows. If he can do it, why can't I? Comparison triggers FOMO, and soon they take trades just to keep up appearances, not because the setup is real. Every trader believes strategy is the answer. More books, more courses, more indicators. But here's the truth: if psychology is broken, no strategy survives. Even the best edge collapses when greed, fear, and boredom take the wheel. Psychology is the foundation. Without it, systems crumble. Think of it like the gym. Overtraining doesn't make muscles grow faster. It breaks them down, leaving you weaker. Overtrading is financial overtraining. The body can't recover, the account can't recover, and the more you push, the more you destroy progress. Growth requires restraint. Now imagine overeating junk food. At first it feels good. Sweet, salty, addictive. But over time your body weakens. Trading works the same way. Overtrading feels rewarding in the moment, but slowly poisons your account, draining energy and clarity until nothing healthy remains. Most traders think losing money is painful, but losing control is worse. Every impulsive trade chips away at trust in yourself. That voice saying, "I'll only trade my plan," gets drowned by emotions. Soon you can't believe your own promises anymore. That's the true damage. Another root cause: the need for constant action. Our brains crave stimulation. When charts are quiet, silence feels unbearable. So we manufacture action. Trading turns into entertainment, not business. But unlike movies or games, this form of entertainment charges you thousands of dollars per ticket. Even after wins, dopamine drives traders to keep going. It's like scratching a lottery ticket. You never stop at one. But unlike a lottery, the more you play here, the faster you lose. Markets punish those who overstay. Dopamine becomes both the carrot and the whip. Losses create an even darker loop. The brain hates unfinished stories. A red trade feels like an open wound that must be healed. But chasing recovery with reckless trades only deepens the scar. Every attempt to fix the story makes the ending worse. Market noise is endless. Indicators blink. Experts predict. News screams. Signals arrive every minute. Your brain believes each alert is urgent. But most of it is trash disguised as gold. And when you chase every shiny object, your focus fractures. And overtrading thrives in distraction. Here's the trap. Traders believe if they just find the perfect strategy, everything changes. But a broken mind breaks any method. The edge isn't in indicators, it's in the trader. Without discipline, patience, and clarity, even the Holy Grail would bleed losses. Mindset drives outcome. Think of social media hype. One influencer screams, "Buy now." Another predicts doom. Traders feel pulled in every direction. This psychological tug-of-war pushes you to act before thinking. Soon your trades belong more to someone else's voice than your own analysis. That's not trading, that's puppetry. Another cause is overconfidence. After a few wins, traders believe they've figured it out. Suddenly risk rules expand. Position sizes double. Stops disappear. But overconfidence is just ego dressed in profits. The market humbles quickly, and the fall feels 10 times harder than the climb. The cycle compounds. Boredom triggers trades, dopamine fuels them, greed pushes further, revenge deepens losses, noise keeps the engine spinning. Overtrading isn't one cause, it's a storm of all these forces combined. And unless recognized, it becomes a self-sustaining habit, endlessly recycling pain. This is why strategy alone never saves you. You can memorize patterns, indicators, and signals, but if psychology is broken, execution collapses. Trading success isn't about knowing more, it's about controlling yourself more. Without inner mastery, every strategy is doomed before it begins. So the true root causes of overtrading aren't external, they're internal. Lack of discipline, dopamine hunger, emotional swings, market temptations, social noise, and false confidence. Once you see this clearly, you realize, your enemy isn't the chart. It's the impulses whispering behind your screen. Set a strict trade limit before you start. Decide, 2 trades today, no more. Win or lose, the number is final. This instantly stops overtrading, giving your mind focus and discipline. Think of it like a boxer. He doesn't fight 50 rounds in one night. Imagine every trade as a round in boxing. 2 rounds today, done. Each trade has intention. Without this, you chase losses endlessly, your mind exhausted. Setting a daily cap keeps emotions out, reduces impulsive decisions, and protects your capital like a boxer guarding his body in the ring. Before clicking buy or sell, pause 3 minutes. Write down your reason for the trade. This small ritual forces clarity and stops impulsive trades. It's like hitting pause on a storm, emotionally and mentally. Many traders avoid disasters simply by waiting before execution. A trader once nearly clicked buy on a volatile market move. He paused, wrote the rationale, and realized the risk was too high. That 3-minute pause saved him from a major loss. The waiting ritual doesn't just prevent mistakes, it trains you to trade like a professional, not a gambler. Set a maximum daily loss. Once reached, shut the platform and walk away. No revenge trading. This is a professional standard. Protect your account like soldiers retreat to fight another day. Without it, even smart traders spiral into emotional disasters, chasing losses they can't recover. A trader hit his loss buffer early in the session. Instead of revenge trading, he left the desk, went for a walk, and returned the next day with clarity. Just like soldiers regrouping, the loss buffer preserves capital and sanity. Discipline over emotion is the key to surviving in trading. Write down every trade you take: entry, exit, reason, and emotion. Journaling builds awareness, tracks mistakes, and reinforces discipline. Your journal becomes a mirror, showing patterns you can't see in real time. Reflection turns randomness into learning. Consistency in journaling transforms a reactive trader into a thoughtful, strategic one. Start your day with a routine before the market opens. Stretch, meditate, review charts, set intentions. A morning routine clears your mind, sharpens focus, and prevents emotional decisions. Trading becomes a planned, intentional act instead of a reaction to chaos. Discipline starts before the first trade. Set alarms or timers to enforce trade rules. Daily cap, waiting ritual, and session breaks. These external cues remove reliance on willpower alone. When the timer dings, you stop or pause. Habits stick when your environment supports them. Discipline becomes automatic rather than optional. Accountability accelerates habit formation. Partner with a trading buddy, community, or checklist. Share your daily trade results, follow-ups, and rules. Knowing someone else will review your actions keeps you honest. Social and structural accountability prevents emotional impulsive trading and builds long-term consistency. Instead of chasing quick hits, trade less but with higher quality. Each trade should feel intentional, not addictive. Focus on process over instant reward. Replacing dopamine-driven impulsive trades with deliberate action strengthens mental discipline and reduces emotional burnout. Quality trades become more rewarding than quantity. Discipline grows from repeated intentional actions. Journaling, routines, timers, accountability, and quality over quantity. Habits scaffold your trading mind, making rules automatic and reducing emotional mistakes. Over time, these micro-actions compound, turning a reactive trader into a patient, consistent professional who thrives in any market condition. Overtrading destroys accounts, confidence, and peace of mind. Remember the 3 rules: daily trade cap, waiting ritual, and loss buffer. They aren't optional, they're life-saving boundaries. Discipline isn't a restriction, it's the difference between chaos and consistent trading success. Your future self will thank you. Ask yourself, will you keep feeding the market impulsively, or protect your financial future? Every click has a consequence. Choosing discipline today is choosing freedom tomorrow. The path of impulsive trading leads to stress, losses, and burnout. Your success depends on conscious, intentional actions, not hope or luck. Take action. From your next session, implement the 3-rule system. Set your daily trade cap, pause before trades, and define your loss buffer. Treat this like a professional experiment. Test, observe, adjust. Immediate application is more powerful than theory. Discipline works when you actually use it. Next video will teach how to recover after a big loss without losing your mind. You'll learn strategies to reset, regain confidence, and return stronger. Following the 3 rules now makes this recovery possible. Discipline today ensures resilience tomorrow. Don't miss this crucial step in your trading journey. Discipline is your secret weapon. The market doesn't owe you a win, but it rewards prepared, patient traders. Overtrading destroys. Rules protect. Habits build. Mindset matters. Take this knowledge, apply it, and reclaim control over your trades. Your future self, the consistent, confident trader, starts today. Decide now. Will you act or drift? Set your rules, honor them, and watch your trading improve. Click pause, record, reflect. Apply what you've learned. Every small, disciplined step compounds into massive results. Protect your capital, protect your mind, and trade with intention. Your journey begins in the next session.